Tim, make the case. I don't think you're necessarily saying that Amazon or DocuSign or Zoom are not good investments, but you think that every, I'm not going to call it a dog, but some of the stocks that have been overlooked might be the place to look right now.
Oh, well, certainly. I think anytime you have something like a global pandemic and the kind of hyper-cyclical recession that followed, you had a lot of stocks that went down 30, 40, 50% in the spring and did not rebound as the stay-at-home stocks did and continue to go up. So I don't think that Apple, Microsoft, Amazon, and the like have to go down. They can just stay where they are while money comes out of the fixed income market and money comes off the sidelines and begins to look for value. And I think you saw that when people began to see that a vaccine was on the way. They started to look at what would earnings be like in the second half of 2021, not whether or not they're going to go to the movies next week. So I think you have it's not just a rotation. It's also a lot of money that's been sitting on the sidelines.
So let's go over some of your favorites. You think Disney is just I mean, think about, I have a thought, I don't finish sentences, I know that, but think about Disney prior to this happening. It's kind of weird, isn't it, how universally loved it was? It was like everything they had, everything they touched, everything they were hitting on all cylinders. It was the perfect combination of assets. Then suddenly this happened, and people actually questioned the makeup of Disney. Now you like it again. Think it's a play. Once the theme parks get going again, you think Disney's a great own.
Right, and I think you hit the nail on the head. Pre-COVID, Disney was what everybody else was trying to become. That combination of broadcast media, the combination of content creation, a burgeoning over-the-top service, and the theme parks. And that really came to a screeching halt in the spring, which is when we became interested in the stock. And coming out of it, what we've really seen is that content is king. Whether it's the content that Netflix is creating, HBO is creating, and Disney creates, has legs for a long time. They are great content creators, and they have a library that everybody else would love to have. So we don't see a fundamental change at Disney other than this accelerated their move to over the top, which will eventually become a more profitable business.
I mean, it helped to reopen. I mean, you make a movie, you get characters, you put the characters, walking around the theme parks, you build a ride that has, sort of with the theme of whatever it was they had for content. But you do need to have like everything open and everything working to fully maximize what happens with your assets at Disney. So that you're assuming that's going to happen.
Correct. And I think that Disney has shown through their somewhat tempered reopening of the theme parks that they can create a safe atmosphere for their customers because this thing is going to last longer. We are very excited by the vaccine. There are 170 different vaccines in production. It's not the kind of thing where we're going to have a ticker tape parade in New York City for the scientists that created this, and there's not going to be a day we can say it's over. So it's going to be choppy along the way. But Disney still has the assets that we really like.
So, Tim, Walgreens Boots, they've suffered from just the focus on COVID. So normal things that people used to get treated for have been put on a back burner. So that's why Walgreens is hurt. You think that reverses?
Right. And both Walgreens and CVS were under some pressure before COVID started because the profitability of the non-pharmaceutical business in the front of the store was being challenged by Amazon, and everybody assumed they were going to go out of business. But as they have moved, as CVS has, to more of a healthcare providing business, they are creating the visits within their stores and getting the subsequent prescriptions in front of the store business. So they've been through a transition, but boy, we feel the stock's just been unduly hurt by what is a complete lack of non-COVID related medical services, right? Medical use services went way down as nobody wanted to go to the doctor. And that will come back. And those conditions are probably worse, coming out of COVID.
Shepard Smith here. Thanks for watching CNBC on YouTube.